I am definitely not against credit. I have credit cards. I use them wisely. I don't carry balances. I try not to anyway. But most Americans are not doing that, right? Okay, so there the consumer is stretched. So I think what the administration is doing is proper, right? Slow it down a little bit, right? Slow down spending a little bit, because the true definition of inflation is what? Too many dollars chasing too few goods. Well, there's too many dollars in the system. Well, whose fault is that? It's Washington's fault, because deficit spending is there. Our national debt is 37 trillion. Now Doge is in charge. They're trying to control it. Are they going to be successful? We'll have to find out. Time will tell. But if you look at the chart on the right, this chart goes back to 2012. This is consumer credit. So the dark line is Capital One credit card charge-offs, and the red line is Discover. They track each other pretty much. Okay. So we are hooked on crack in this country. Our crack is called credit card. It's plastic. It's a dangerous thing to play with. I am definitely not against credit. I think credit is wonderful if used properly. Unfortunately, it becomes an addiction, and most people can't control it, can't control the spending habit, okay? Because banks are willing and able to offer more and more and more and more credit to the consumer. And what does the consumer do? They like spending. They spend what they don't have. They don't have a budget. Just go, I'll pay it later. Well, I'll pay it later with a 30% interest rate on average on your credit balances is going to take you to the poorhouse. But besides that, let's look at that chart. There is a huge drop-off right here from 2020 to 2022, 2021, late 2021. What is that? What does that coincide with? Credit card charge-offs went down tremendously because we had COVID. What happened during COVID? People were issued checks for staying home. And what did people do correctly? They went and paid off their credit card balances. No need for charge-offs. Great. Well, look where we are today. Again, the chart is telling the story. The story is we tried to save some money as Americans, which we did because we're sitting home. There's nothing to spend on. We paid off balances. Now we're right back to where we were and more. So it seems like the crack addiction is back with a vengeance, and the charge-offs are now going through the roof. Consumer credit charge-offs at Capital One jumped to 6.35% in February. You guys may not say 6.35 is a big deal. It is a massive deal if you guys figure out how much revolving credit is involved out there. Charge-offs at Discover Financial surged to 6.03%, also the highest since 2011. Think about this, okay? To put this in perspective, consumer credit defaults going into 2022 were at just 1.5%, which is the low on this graph. In other words, the percentage of credit card debt unlikely to be collected has quadrupled in 3 years. Okay, so there's your crack addiction. Okay, now you're going to the poorhouse. All while, look at this number, people. U.S. credit card balances. This is balances that you carry and you pay the banks and get them rich and richer. Is the credit card balances surged by 45 billion in just a single quarter of 2024 to a record, hang on now, $1.2 trillion. Okay? Is the credit card debt bubble about to burst? Well, according to this graph, it is. But more importantly, what you guys must understand is credit used properly is a wonderful thing. Credit used improperly will definitely break you. You know, there are a lot of people on YouTube, they go like, you know, there's a famous one that says, no debt, no debt. No, I disagree with that. I think some debt is a good thing. It's like an oil of the engine, right? If you're doing good things with that credit, if you're paying your balances every month, look, the banks are giving you 30 days to float their money for interest free. If you buy something on credit, you pay it at the end of the month. There's no balance carry forward. Great, do it again next month. But if you're bringing in 5K a month and spending 10K on credit cards, that 5K balance going forward, accruing 30, 40% interest rates on average on your credit card balances, unless you're able to do some sort of financial, you know, games and you know, transfer balances from here to there to there. Credit cards are not made for that. Credit cards are made for buy something, pay for it in 30 days, do it again. Look, the banks float your money quite a bit. Actually, the money that they're lending you is your money on credit. You go deposit money in the bank. They just turn it, and what they pay you, by the way, right? If you're in a money market, they pay you 4%. Well, most banks are not going to pay you 4%. You go put it in a savings account, they pay you 1%. They take your money, turn it around, and sell it to you for about 30%. Does that make sense? Does that make sense to any of you? Doesn't make sense to me. But unfortunately, Americans are living on credit, and they keep doing it. $1.2 trillion in revolving debt. Think about it. Well, like I was saying, consumer is stretched, and if the administration plan is to slow spending, this is the time to do it before the charge-offs get completely out of control, and we're putting right back to where we were before the pandemic. The numbers look pretty much similar to before the pandemic, actually. The charge-offs are higher than before that. So during the pandemic, we got the money, government money, we paid all our debts off. Well, within a couple of years, we're right back to where we were and worse. Unfortunately, that's what it is. Americans love credit, and they abuse it. Don't do it. It's a fast way to go to the poorhouse.